Good morning, I'm Maiki Oreta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. U.S. President Donald Trump drops a trade bombshell, unveiling a sweeping tariff package that could disrupt global supply chains and stir market volatility. The world reacts. Canada promises retaliation. Australia stays on the sidelines, as all eyes turn to how Asia will respond. Plus, a win for Bilyonaryo Ramon Ang. Ginebra San Miguel secures a 66 million peso tax refund after a court ruling against the BIR. After days of speculation and global market anxiety, U.S. President Donald Trump finally unveils a sweeping tariff package that could reshape global trade flows and rattle major economies. Trump announces tariffs of at least 10% on practically all goods coming into the United States, a move that comes amid growing pressure from American industry leaders to address the country's trade imbalances. He also slaps higher duties on dozens of countries that hold the biggest trade deficits with the United States, further deepening concerns of a potential trade war. A group of about 60 nations will now be charged a tariff equivalent to half of what they currently impose on American products, under what the White House is calling a reciprocal trade framework. These tariffs take effect on April 9th, setting off alarm bells across emerging markets and trade-reliant economies, including the Philippines. Trump is also targeting the auto industry, imposing a 25% tariff on all foreign-made vehicles to counter what he calls horrendous imbalances that have hollowed out the U.S. manufacturing sector and threatened national security.
So, if you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here. We didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart. So it's 67%, so we're going to be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything, but now we're going to charge.
And the market's reaction is immediate. U.S. President Donald Trump's tariff announcement sent shockwaves across Wall Street, prompting a wild swing in trading as investors digested the potential global ripple effect. U.S. stock indices ended higher after a volatile session on Wednesday, initially sliding on fears of a trade slowdown, then staging a late-day rally as investors positioned ahead of further policy details. The trading session reflected nervous optimism as markets weighed the scale of tariffs against the possibility of further negotiations. Volatility has been building in recent weeks as investors worried about the broader impact of tariffs on global growth, inflation, and U.S. corporate earnings, all of which are critical drivers for Philippine exporters and equity funds exposed to global markets.
Investors, I believe, are pretty offsides and pretty conservatively positioned or betting against the positive, if any, outcome of the tariff decision making. And so I think that even as we get more information today, it's going to take people some time to digest that news and decide what they think about it.
The Dow Jones Industrial Average closed up by 0.6%, the S&P 500 higher by 0.7%, while the tech-heavy Nasdaq climbed 0.9%. Over in Europe, the UK's FTSE 100 dipped 0.3%, Germany's DAX lost 0.7%, and France's CAC 40 inched lower by 0.2%. As global markets react, so do world leaders. Countries around the globe are now drawing their own lines in response to President Trump's tariff offensive, setting the stage for heightened trade tensions. Canada says it will fight back, with Prime Minister Mark Carney announcing plans to launch countermeasures against the United States' tariffs.
We're going to fight these tariffs with countermeasures. we are going to protect our workers, and we are going to build the strongest economy in the G7. In a crisis, it's important to come together, and it's essential to act with purpose and with force, and that's what we will do.
Australia, however, is taking a different approach. It will not impose retaliatory tariffs, but Australian Prime Minister Anthony Albanese did not hold back, calling the move by the US not an act of a friend.
President Trump referred to reciprocal tariffs. A reciprocal tariff would be 0, not 10%. The administration's tariffs have no basis in logic, and they go against the basis of our two nations partnership. This is not the act of a friend. Today's decision will add to uncertainty in the global economy, and it will push up costs for American households. This is why our government will not be seeking to impose reciprocal tariffs. We will not join a race to the bottom that leads to higher prices and slower growth. We will stand up for Australia. We will continue to make the strongest case for these unjustified tariffs to be removed from our exporters.
Amid global uncertainties, pressure is also building on the home front. The Philippine government's fiscal position took a hit in February as spending outpaced revenues by a wide margin, just as the country edges closer to a potential credit rating upgrade from one of the world's biggest ratings agencies. Data from the Bureau of Treasury shows the budget deficit widened to over 171 billion pesos in February, nearly 5% higher than the 164.7 billion pesos recorded in the same month last year. This also marks a sharp swing from a 68.4 billion pesos surplus in January, highlighting how government spending continues to outpace softening revenue collections. In total, expenditures hit 423.2 billion pesos, while revenues came in at just 251.8 billion pesos. The widening fiscal gap could complicate the country's push for a much-awaited credit rating upgrade, with investors and analysts watching closely to see if the Philippines can stay on course with its fiscal consolidation. While the government grapples with a widening budget gap, there is some good news on the investment front. The Philippine Economic Zone Authority, or PEZA, reports a surge in investment pledges for March, a sign of growing investor confidence despite global uncertainty. PEZA says it approved 6 billion pesos worth of new and expansion projects during its March 28th board meeting, more than double the 2.8 billion pesos in pledges approved in the same month last year. That's a 110% increase, marking a strong start to the second quarter for the country's economic zones. PEZA says these 27 projects are expected to generate over $200 million in exports and provide direct employment to more than 4,500 Filipinos. The new projects are scattered across key growth regions, including Metro Manila, Central Luzon, Region 4A, Central Visayas, and Northern Mindanao, signaling broad-based interest from investors seeking strategic locations for manufacturing, logistics, and export-oriented operations. With new investments flowing into economic zones, the government is also moving to ensure that the lights stay on. The Department of Energy, or DOE, is giving assurance that there will be no brownouts this summer, even as demand surges heading into the dry season and the midterm elections. Energy Assistant Secretary Mario Marasigan says while power supply remains sufficient, there is still a possibility that reserve levels could be stretched, particularly during extended heat spells or if power plants experience unplanned outages. The DOE says it is closely coordinating with power industry stakeholders to prevent any such disruptions, especially as the country prepares for the midterm elections this May. And as businesses, including those in economic zones, operate at full capacity during peak summer months. Marasigan adds that the current power supply is stable and that they do not anticipate any shortage in electricity service provision at this time. From power to public transport, another key area in national infrastructure is under the spotlight. The Management Association of the Philippines, or MAP, is backing the controversial fare hike for light rail transit Line 1 amid mounting pushback from commuters. MAP argues that the government must honor its contractual obligations to the LRT1 operator, saying compliance is necessary to protect the level of service required under the public-private partnership deal. The group warns that failure to adjust fares as agreed could lead to the gradual deterioration of train operations, affecting daily commuters and jeopardizing long-term transport stability. MAP's statement comes amid strong criticism from commuter advocacy groups who argue that the hike is grossly disadvantageous to the riding public, especially at a time of high cost of living. Malacanang has earlier defended the fare adjustment, insisting that any move to suspend the hike would violate the government's contract with the private operator Light Rail Manila Corporation. A big win for Bilyonaryo Ramon Ang and a wake-up call for tax authorities. Ginebra San Miguel wins over 66 million pesos in tax refunds from the Bureau of Internal Revenue, following a decision by the Court of Tax Appeals that hinges on procedural timing and due process. The case centers on Republic Act number 11467, which raised excise taxes on alcohol products from 24 to 34 pesos per liter and later to a flat rate of 42 pesos per liter. The BIR argues that the higher rate took effect immediately on January 23, 2020, the same day former President Rodrigo Duterte signed the law. But the tax court ruled otherwise, saying the law only takes effect after complete publication in the official gazette or a newspaper of general circulation, unless a specific date is stated. The court clarified that in this case, no alternate effectivity date was provided. It called the BIR's imposition of the 42 peso excise tax before February 10, 2020 premature and illegal. The ruling not only favors Ginebra San Miguel, but it also underscores the importance of following due legislative process, a message likely to resonate with other corporates in similar tax disputes. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line.
From the filing of candidacies until the last ballot is counted, your newest trusted news source, BNC, the Bilyonaryo News Channel, will be at the forefront to guide your decisions and guard your vote. Tune in to BNC's Election 2025 special coverage at Bilyonaryo News Channel.
Magandang umaga mula sa The Hague, Corina, at sa mga nanonood sa atin.
We've built a legacy of delivering the stories that matter in Philippine politics. We bring you exclusive coverage straight from The Hague, featuring in-depth stories from attorney Karen Jimeno.
This issue is the subject of intense debate.
For trusted, insightful, and unmatched coverage on Bilyonaryo News Channel.
Welcome back. Let's take a look at how Asian bourses are faring this morning. Japan's Nikkei 225 is deeply in the red, down by 3.1% in early trade. Hong Kong's Hang Seng Index flat with a negative bias, down by less than a tenth of a percent. Shanghai's Composite in the green. flat with an upward bias, higher by just under 0.1%. Singapore's Straits Time Index in the red, lower by 0.4%. Now, taking a look at our market, just recall Philippine shares extended their winning streak yesterday, rising for a third straight day as investors grew more optimistic about a possible rate cut from the Bangko Sentral ng Pilipinas. The main index climbed 1.1% to close at 62.48 as investors positioned ahead of the central bank's next policy meeting on April 10th. Expectations are building for a rate cut. That's if March inflation remains below target. And while overall trading remained muted, sentiment is continuing to improve, with investors betting that monetary easing will boost business activity and reinvigorate the market in the coming weeks. But all that cautious optimism will be tested with the subsequent announcement of new U.S. tariffs. Markets are now facing a fresh wave of global uncertainty as investors assess the broader impact of the escalating trade tensions on the local economy. Taking a look at the equities market as of 10:16 this morning, the PSE index is in the red, down by about 1% to 61.87, back at the 6100 mark. All shares index in the red as well, down by 0.7% to 36.80. Taking a look at the sub-indices, all are trading in the red except for the services counter, which is in the green, bucking the market's downtrend, up by 0.4%. Now, at the foreign exchange market, the peso opened at 57.25 against the greenback. This is stronger than its previous close of 57.21. But as investors bet on lower interest rates to boost growth, another domestic factor may pose cost pressures for businesses. The proposed 200 peso across-the-board minimum wage increase is now under review by the Regional Tripartite Wages and Productivity Board. That's according to Palace Press Officer Claire Castro. The review follows a formal request from the Trade Union Congress of the Philippines asking President Bongbong Marcos Jr. to certify the wage hike bill as urgent. But Castro says the president has instructed a strict following of the labor code. She adds that the president also ordered regional wage boards to assess current salary levels, stressing that some regions have already implemented increases. The outcome of these reviews will be closely watched, particularly by investors and business leaders concerned about rising operating costs. On another front, Ayala Corporation sells its 50% stake in AC Ventures Holding Corporation to Japan's Mitsubishi Corporation in a deal valued at least 18.4 billion pesos. The move comes as Ayala continues to streamline its portfolio while Mitsubishi deepens its commitment to the Philippines' growing digital economy. AC Ventures holds a 13% stake in Globe Fintech Innovations, the parent company of GCash and tech-based micro-lender Fuse Lending. Under the agreement, Mitsubishi subscribes to over 18 million common and redeemable preferred shares in ACV post-transaction. Ownership remains split 50-50 between Ayala and Mitsubishi. The deal could impact the valuation of GCash, which is widely expected to pursue an IPO soon. A Senate committee hearing reveals a high-profile family dispute involving millions of pesos held in accounts at two of the country's biggest banks. The widow of late businessman Eduardo T. accuses his children of quietly draining his accounts while she was blocked from accessing even a single statement. Sujin Kim has this report.
I didn't know that a family estate issue would turn into a national issue.
What began as a private family dispute has exploded into a national scandal after Gina T., widow of late businessman Eduardo T., laid bare before a Senate hearing what she claims to be the systematic plunder of her husband's multi-million peso estate by his own children from a previous marriage.
I didn't know that in the course of my grieving, I didn't know that money transfers were already being made by my stepchildren.
Gina claims that banks stood by silently and even enabled the movement of funds. Her husband died in 2021 due to COVID-19. Nearly 3 years later, she says she has yet to receive even a single bank record from RCBC or Metrobank, where most of his assets were held. When finally she was able to review accounts, Gina discovered suspicious withdrawals and checks that appeared to have been issued while her husband was already medically incapacitated.
So there is no way for the checks to be signed by my husband kasi COVID pa, naka-intubate pa siya. And nobody is allowed in the COVID ward. And then ang mas masakit po, Senator, as I mentioned to you during your show, was withdrawals were being made after his death. And alam naman po natin ng batas that pag may namatay na po, frozen na po ang mga assets.
Pero alam ba nung bangko, ma'am, na
Opo, kasi
away na yung husband
yes,
niya?
sir, because they even sent flowers to our house during
Okay,
the
so
way.
alam nila.
Opo.
She says Metrobank and RCBC refused to give her access to her late husband's balances, invoking the bank secrecy law despite her being the legal spouse.
And my argument with them was, what are you keeping the secret from when I'm the legitimate spouse?
It was only after she received partial data from RCBC that the alarm bells started ringing.
When I saw the amount, sir, I'm not sure if it's safe to share, but when I saw the amount, the balance of the 7 peso accounts, 6 figures lang po yun. And hindi po ako naniniwala na 6 figures lang yung balance ng asawa ko. Kasi that means mas marami pa akong pera sa kanya, which is impossible. My husband owns 3 companies in Surigao del Sur. We have 176 employees. So imposibleng 6 figures lang po yung balance ng account ng asawa ko.
Gina claims that after her husband's death, millions were moved, including to a company called Mighty Oaks Corporation, fully owned by her stepchildren. Senator Raffy Tulfo slammed the banks, warning that officials who evade accountability could face detention.
Once na dapat may pumunta sa inyo para magreklamo, ma-action agad kayo. 3 years na pala siya pabalik-balik. Ang bagal ng aksyon ninyo. Until na nagsumbong siya rito, hindi pa sana kayo umaksyon. Dito hindi ako papayag. Pa-imbestigahan ko kayo. Patatawag ko yung Bangko Sentral ng Pilipinas kung kinakailangan. Every week maghiring tayo rito. Sige, 1 to sawa tayo.
Senator Tulfo promised to subpoena Gina's stepchildren and continue the probe. The Senate is now eyeing policy reforms to ensure that widows are not left in the dark about their legal rights and their husbands' estates. Sujin Kim, Bilyonaryo News Channel.
At least 2 senators put the Securities and Exchange Commission on the spot, questioning why abusive online lending companies continue to operate despite existing regulations. Sujin Kim returns with this report.
Senator Raffy Tulfo is fuming over what he calls the negligence of the Securities and Exchange Commission in regulating online lending platforms, or OLAs. This comes after a barrage of complaints involving harassment and data privacy breaches committed by these digital lending apps.
Tadtad na po ako ng mga reklamo sa napakaraming mga netizens na nagreklamo online. They're being threatened, bodily harm, papatayin, tinatawagan yung kanilang mga kasamaan, hinaharas sila sa work.
Tulfo accused the SEC of allowing lending companies to share confidential borrower information with third-party service providers.
Lahat ng mga personal information nila nakakarating na sa iba't ibang tao na talagang harassment ang feeling nila. So, this has to stop.
SEC OIC Director Attorney Kenneth Joy Quimio defended the agency, saying third-party agents are partners of OLAs. Tulfo questioned the SEC circular that allows the sharing of borrower data to third parties. He also revealed that Sunprime Inc., which did not apply as an OLA before the moratorium, was still allowed to operate in 2025 under the name Salmon Finance. Tulfo demanded that the SEC clean up and release a verified list of legitimate lending apps. He called out the 181 apps currently on the SEC list, pointing out that 40 were not on the original list before the moratorium. Senator Win Gatchalian also issued a warning to lending apps imposing unreasonably high interest rates.
Hindi natin sinasabi na wag na magbayad yung mga umutang. Ang sinasabi lang ho natin, dapat makatarungan, wasto at legal yung pangongolekta. Hindi ho yung pananakot at pagbabanta po sa buhay.
Meanwhile, Tulfo requested a subpoena for all GCash directors for failing to appear in the hearing, despite being implicated in several collection-related complaints. Sujin Kim, Bilyonaryo News Channel.
U.S. President Donald Trump says he plans to stop Russia's war on Ukraine, a bold statement that could shift the geopolitical landscape and ease market anxieties over energy security. With the conflict now in its 3rd year, the Trump administration is growing impatient, with both Moscow and Kiev urging faster moves toward de-escalation. Ukraine has expressed willingness to enter a 30-day ceasefire, but Russian President Vladimir Putin has rejected that offer, raising concerns over verification and claiming that Ukraine could use the truce to rebuild its military stockpile. The stalemate continues to cast a shadow over global markets, with investors watching for any breakthrough that could stabilize energy prices and reduce geopolitical risks across Europe and Asia.
We're approaching our 100th day as president and have been given credit by a lot of people, actually, even some of the fake news. Can you believe it? Which in this case, hopefully, isn't fake, for having done more in that time than any other administration in the history of our country in the first 100 days. I think we've had an amazing in terms of what we've done, what we've gotten accomplished. I'd like to see if we can get that war ended and another war from not starting in the Middle East.
And that's it for Business 360. I'm Maiki Oreta. Keep it here on BNC, the Bilyonaryo News Channel.